Welcome back to Explain the Charts, where we break down the market data and news to help you understand what's happening and make informed trading decisions. Today, October 7th, we're focusing on the XAUUSD, or gold, to see what the current news and charts are saying. Let's first look at the recent headlines to get a sense of the current market sentiment towards gold. Looking at a Google search for XAUUSD, we can see that there has been a lot of recent news discussing the impact of the U.S. jobs report on gold prices. The report showed stronger than expected job numbers, which boosted the U.S. dollar and pushed gold prices lower. However, some analysts are predicting that gold may still see an upward trend in the long term. For example, Goldman Sachs has raised its gold price forecast for early 2025 to $2,900 per troy ounce. They cite two primary drivers, inflation and a weakening U.S. dollar. Of course, these are just forecasts and the market can be volatile. We'll have to see how these factors play out in the coming months. Now, let's take a look at the chart data and see if it supports this narrative. Looking at the daily chart, we can see a long-term upward trend for gold. Gold has been on a gradual rise since the beginning of the year. However, we can see a slight pullback in the last few weeks. This pullback likely stems from the recent U.S. jobs report, which has strengthened the U.S. dollar. Despite this pullback, gold prices are still trading above the 200-day moving average. This suggests that the long-term bullish sentiment for gold is still intact. On the other hand, we can see that gold prices are currently facing resistance around the $2,650 level. If gold can break through this resistance level, it could signal a continuation of the long-term upward trend. However, if gold fails to break through this level, it could signal a correction or even a reversal of the trend. Let's zoom in on the 1-hour chart to get a better understanding of the short-term trend. Now, let's shift our attention to the 1-hour chart, which gives us a closer look at the short-term price action. Here, we can see that gold prices have been consolidating around the $2,650 level for the past few days. This consolidation is likely due to traders trying to gauge the market's reaction to the recent news. We can also see that the 1-hour chart is showing signs of a potential bullish breakout. The price is currently trading near the top of the consolidation range, and the RSI is above 50, suggesting that bullish momentum is building. However, we need to be cautious. If gold fails to break through the $2,650 level, it could signal a bearish reversal. The 15-minute chart might offer more insight into this short-term action. Let's dive deeper and look at the 15-minute chart for a more granular perspective. Here we can see that gold prices have been making a series of higher highs and higher lows, indicating a bullish pattern. This pattern aligns with the potential bullish breakout we observed on the 1-hour chart. However, there's a noticeable increase in volatility on this time frame, which can make trading more challenging. We can see that gold prices are facing some resistance around the $2,660 level. If gold can break through this resistance level, it could trigger a short-term rally. On the other hand, if gold fails to break through this level, it could signal a short-term correction. It's important to monitor the price action closely to identify any key turning points. To recap, the current news and chart data are painting a mixed picture for gold. While the long-term trend remains bullish, with gold prices trading above the 200-day moving average, we're seeing some short-term consolidation and resistance around the $2,650 level. On the 1-hour chart, there are signs of a potential bullish breakout, but this is still uncertain. The 15-minute chart shows increased volatility, with gold facing resistance around the $2,660 level. Here's what to look for in the coming days and weeks. If gold can break through the $2,650 resistance level on the daily chart, it could signal a continuation of the long-term upward trend. The probability of this occurring would increase if we see a clear break above $2,660 on the 15-minute chart and a break above $2,660 on the 1-hour chart. This would reinforce the bullish sentiment. On the other hand, if gold fails to break through the $2,650 level on the daily chart, it could signal a correction or even a reversal of the trend. This would be particularly concerning if we see a break below $2,640 on the 1-hour chart. Remember, these are just possible scenarios, and the market can move in unexpected ways. Stay informed, analyze the charts, and make your trading decisions based on your own risk tolerance and investment strategy. Keep in mind that this is not financial advice, and it's crucial to do your own research and consult with a financial advisor before making any trading decisions. Thank you for watching, and we'll see you in the next video.